Hello friends, welcome back to the US Stock GPS channel. Today, all four major US indices had a bumpy ride. Markets sold off in the morning, tried to rebound, then slipped again. By the afternoon, we saw a modest recovery, but the bounce wasn't strong. This really highlights how divided investors are over the Fed. Will they cut rates in October, and how much more easing might come this year? Buyers and sellers kept trading punches all day. On one side, economic data hasn't clearly signaled recession risk. On the other, Fed officials sound cautious. That lack of clarity leaves the market drifting without a strong anchor. Volatility climbed, prices swung back and forth, and investors stayed in wait-and-see mode. No panic, but no unified confidence either. By sector, medical distributors, devices, and equipment were hit especially hard. The U.S. Commerce Department launched a Section 232 investigation into imported medical products. Not just masks and gloves, but syringes, infusion pumps, MRI and CT machines, wheelchairs, hospital beds, even pacemakers. The scope was much broader than investors expected, raising real concerns about tariffs and supply chain risks. As details came out, multiple analysts cut earnings forecasts, and with rate cut expectations fading, money rushed out of this group. Several key stocks were directly affected. GE Healthcare slumped but managed to recover part of its losses later in the day. Becton Dickinson dropped about 3%. ResMed was down 2.5%. McKesson, a distributor, at one point plunged more than 6% before clawing back half of that. If you bought MCK earlier this week, you're still up overall, but today was a test of conviction. On the brighter side, Intel jumped another 8.9%. The rally's being fueled by rumors of an Apple investment or partnership, Nvidia's prior stake, and signs of recovery in PC demand. But this phase looks more like sentiment repair than solid fundamentals. For the trend to hold, those rumors need to turn into real deals and orders. Intel still lags TSMC and Nvidia in advanced chips and foundry, and if the stock rises too quickly, valuation risk becomes real. You could consider adding small here, but chasing with big size is risky. Better to test with a tiny position if you missed the move earlier. IBM also had a big day, surging over 5% on strong volume. The catalyst? HSBC revealed a quantum computing bond trading trial with IBM's tech that improved prediction accuracy by 34% compared with traditional models. That gave IBM a boost as a real player in combining frontier tech and finance. IBM has invested for years in quantum, AI, and hybrid cloud, and this gave investors fresh confidence. Still, this was based on historical divided by simulated data, not live markets, and quantum adoption is still in its early days. The risk is if results don't translate, sentiment could fade quickly. Over at Oracle, the news was mixed. Trump signed an executive order backing TikTok's U.S. restructuring, with Oracle named as a key partner. At the same time, Oracle raised a massive $18 billion through a bond deal to fuel its AI and cloud push. While that shows ambition, it also raises debt risk. And analysts at Rothschild Redburn downgraded the stock to sell, arguing optimism on cloud may be overdone. Oracle fell more than 5% today. If you're heavily invested, trimming might be a smart move here. Tesla slipped today as well. Fresh data showed August sales in Europe fell 37% year over year, while rivals like BYD gained ground. Combined with Tesla's sharp rally earlier this month, valuation pressure is building. Add in Musk's big compensation plan and ambitious robotics divided by AI bets, and investors are attaching more risk premium. Still, the drop came on light volume, no mass exodus. Funds continue to hold, betting on Tesla's long-term story in EVs, energy storage, and AI-driven autonomy. In summary, volatility picked up today as investors reassessed the Fed and the economy. The market is cautious but not panicked. Stuck in a choppy tug-of-war, the next big moves will depend on incoming data and Fed signals. Thanks for watching, friends. If you found this helpful, don't forget to subscribe and hit that like button. See you next time.